All right, this was a very interesting day. So today is the 22nd, and we had a fairly interesting market day. You can kind of see the carnage from this particular event. You know, we had a downtrend. Let me go ahead and erase everything. That way we can just start with a fresh batch. So what I like to do whenever I look at anything is I like to look at the data. So we're obviously going to trade the 22nd, and we would look at what I think is relative to maybe the last couple days worth of data. And that's what we'll go off of. So pretend this doesn't exist, obviously. And we're going to start your lines. And this is interesting, but you're going to want to just draw in what you think might be relevant. And then you go to smaller time frames, right? So today is the 22nd. Let's just get that. 21st. Nah. The neat thing about need or unneed or whatever you like to call it, it gives you a chance to look at previous data and levels, you know, kind of in a different area. Whether you're ever going to hit those levels or not, it at least gives you a spectrum of what you're kind of looking for, and is there anything you're missing? Is there some pretty neat, you know, shit that, you know, maybe might come into play? A lot of times it does, sometimes it doesn't. I mean, we're obviously playing, this is the 22nd, so let's pretend that none of that exists. And we just kind of want to break down where we're at going into a particular day. So let's move this, whoops, shit. Let's move this over here. So we can see a trend going down on the 15. For sure. You've got this trend just hitting down and hitting down there, right? So sometimes if you see the staggering move down, let's take a look at it. I don't like that line. That line's a little bit too much. Nah, I'd probably just go with the top for now. We got levels here, kind of bases there. So I would have a level there. I'd have a base level there. And I'd have a low there. Which may or may not mean anything. Okay, let's get into our day. Okay, so here's our So we have a downtrend coming into the 22nd. So we can see we go down, we base, we start to build up, we hit here, we reject, we go back down. And now we're kind of live. We go all the way up here, that's our high, and then we go to here. So that's a low. So let's go ahead and mark that off. Granted, that's, 3:50 in the morning, but that is a low. And let's see what happens. If I don't wake up this early, but obviously that base held up rather well, so you could have played that had you wanted. I kind of like to see what it does at around 9:30. And that was it. So we had a range and a range up. So nothing that impressive for the open. We kind of went here. This was our top, right? We established a top here. So let's white that out. So 9:30 we topped. We started to make a move down. Our original bottom was here. So going into the day, we kind of knew this was a baseline of support, but it broke it. It broke it down to there at that particular time frame. So now let's look at the data we have going in. So at 3:40 in the morning, we're playing off this line. And we kind of have a high here, right? So what we want to establish is what range are we at and how is it reacting within this range. So we can see we're kind of topping off here for a while. Not quite, our previous line. We're more this line here, which is one of the lines we drew from the past. So we're playing this range in the morning, right? So 6:45, it breaks at this point here, where it really shoots up. Here's our top of the day. It breaks that, pulls back down to almost our line, doesn't quite touch it, but within that general area, then pulls up. So here's where I like to look at things. I like to look at 9:30. Let's see what happens. So it breaks a new high. It breaks this high, goes all the way up, creates a new high, falls. All right, so here's our current high of the day with a wick, goes back down. What do we do now? We have quite the bar here. We make a move from 64 to 39. And with the wick, even 34, we go back up, we go down again. Right? So we kind of based here on our uptrend, meaning we went up, we based, we went up again. Here, in theory, would be a base, but we break that base and we go down. We shoot all the way down to here. This was our previous base, but we crush it, right? And then we go up. We break it. And then we go down. And then we go up. And now we're on a run. So how would you, looking at some of this previous data, how do you want to play a day like today? So what I like to look for is there's lots of intermediate moves you can make, whether you play small ball or big ball. So for instance, if you like playing small ball, you could play this line from 67 to 16, short it, long it, short it, go long. right? Just play off this line till this line doesn't work. So that's 1, 2. That's a monster. 3. But that's one way of playing short ball, where you're playing 10 to 20 points, maybe done 2 to 3 contracts. Your day's over with. There. Now another option is if you don't want to risk your capital. So if something goes against you, and you have 3 contracts or you have multiple contracts, that could eat up your capital very, very quickly. So, but a lot of a way to counterbalance that is to say, I want to establish a top range and a bottom range. And a good way to kind of get a rough feeling is wait till the New York Open, which is 9:30, and then just give it some time, see what it does, see where it flares out, etc. So we know we're ranging from here, this, here. As far as we know, that's our top. We wicked it, but then we came back down to here again as a base of support. So when we hit that 9:30, we make a new high. Now, here's our new high, which beats that one. We'll draw that out too. Excuse me. So now we know we've established this line here, and we need to figure out what it's going to do. So our very next bar, we can even go on a smaller time frame if you'd like. It looks a little different on the one. We can see we base, we go back down, we go all the way back up, bang, 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 and we go down. And we continue down. We continue down. We continue down here. And we break it. Now, what I would look for is I would look for this general area here to be my long, even though it broke. So I would let it break here, go down, and then the next time it shoots up, I'm looking to go long. So I'm looking to take a long here. So that's 67, 87, 10 points. Bang, I get stopped out. I do nothing. Let it do its thing. It goes up, goes down, I get back in here. Right? I'm not getting stopped out again. So you see there's no lower bars. So if I'm playing off this established low, and one of the things I'm looking to do, so it goes low, boom. Looking to go long here. Bang, get stopped out. Now, even though I got stopped out here, some of the data that we're looking at is we're looking at an up, a top, and we're looking at a retrace to come back down to here, which it did do. And then it eventually stopped here, right? So I'm looking for a breakout to retrace this general area from here to here. That's what I want. I want that area. And if I'm real savvy, I could play this range in here, start playing the bars, but I'm going to keep it simple. I'm fine with taking a short. I'm fine with getting stopped out here. That's fine. So now let's play the next round. This is a 1 minute bar that doesn't get much more, than the 1 minute. So if I'm playing this range, and that's 66, and I have whatever, my 10, 15 point stop, to 56, I never eat that. I don't eat that heat. So I'm down 10, and now I enter in here. And now I have a range here. It goes up. Now what I'm looking for here, if you play a smaller area, is you can see how it peaked there. So it goes up, pulls back, right? So it goes up, we go up, we get our first pullback here. This area in here, right in there, I wouldn't mind taking another position. And then I go here and I'm playing this range. Right? Now I start going up to another level. So I have here to here, here to here, this range, and now I have this range, which it does hit it there, but I'm not concerned with that. What I'm concerned with is this area here. I know this sounds crazy, but this is the move that you would want to look for. And maybe if we go to a 5 minute or 15, we go to some more bigger time frames, it looks a little different. Excuse me. So we see we go down, we base, right? We go up, base again. Now we start making some moves. We go up, we pull back to that bar. Look to go long again. FUD, FUD, FUD. You can even draw a line there if you want, just so you can get a rough idea of how to add, like a possible entry you could use if you wanted to add on to positions. So we'll make it blue. So we have our entry here, our second entry there, and we can see it's basing here, right? So this line here, once it breaks through this level or that bar, if you wanted, you could also do another, I don't know how greedy you might be. Oh shit. God, I'm tired. That would be your third entry if you wanted. Or, I guess if you're trying to protect your capital, just go with this move here. Because realistically, you're looking at, 1266, which is not bad. And then you're looking for a range anywhere from 161 to 173. So let's not get too greedy, but let's say we definitely want this area here, which we'll say 12162. So you're ballparking probably, well, in that area is like 90 plus points, right? It's not quite 100, maybe 96, 95, whatever. But that's one contract for 100 points, right? If we go in here, now we're taking 20 points less. So now we ride this one up. So instead of 90, we hit 70 on the second, right? Then we have this one here, which is 17 from 61. You get the picture. So you could have where you take a 100-point run. You could turn that into 200 plus. But the main thing I want to stress here is you want it, and it's not easy to do, but if you're playing a longer game, so we'll go through this whole thing again, right? We look at our overnight, we come down, we start ranging off of this line, bang, bang, bang. We establish our line here, right? Now we need to know kind of a range of where it's going to top out at. So we're going to wait for the 9:30 open, and we're going to wait till it loses steam. And we're going to try to our best ability, come up with a high for the day. So here's your 9:30. So this is the long game. It's not the short game, obviously. So because we're playing ding, 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 there's lots of tiny moves we can make in between this area if you like to play small ball. But we're not interested in that. I'm only interested in establishing a good baseline for a low, even if it isn't the low, and a good baseline for a high. So from our upward trend and then a failure and then a downward trend, we're establishing this range as our high. We've established this range as our low. Now, does it hold up? No, it does not. It gets broken. But here's what I'm getting at. Who cares? Because what we want to do is we want to cover the amount of money in this area. So I have a bunch of money that's sold, and regardless, the journey down is normally quick. Sometimes the journey up is a motherfucker. So you have, a little bit of stitching, a little bit of stitching, a little bit of stitching, wham, all the way back down, right? And all the way back up, and all the way back down, all the way back up. You have a lot going on. But what I would like to stress is that if you were to establish a high and a low and not worry about this in between so much, right? So let's say you even didn't worry about adding on to positions, and you just worried about, well, I've established my high, this looks like a good base for a low. So when it breaks this base, if it breaks it up again, I'm looking to go long. So I go long here, bam, I get stopped out. Well, I'm going to wait till it breaks again. I break this base here, and now I start my journey. And that goes all the way up. I'm out. I'm out here. And actually, I am probably out in this range here. Now here's another interesting part. If I take profit here, right, and I look for a short, am I looking for a full retrace down? Maybe. That's another option to play. Or am I thinking it's going to break up? Well, you would get chewed up. So had you gone short here, that's not bad, guys. Jesus Christ, 68, 45. When you start hitting 20 points, start taking profit. But what I'm getting at is we've established an area where we've had a tremendous amount of selling, some buying. More than likely, not guaranteed, we're probably going to end up at least halfway or a retrace. So if you are playing that, you want to establish an entry that's close to this line. The reason why is if we get down here, we might get wicked up here. It's too much heat. So depending on when you want to play this, so if you played here, say you went out here, and then this area here, right, was your short. So let's say you shorted there. I would probably take some profit, but now you get wicked out, right? You're not getting stopped out there because you got a 10 points up. But let's say here you get taken out. So once again, it's a similar situation as down here. So we're stopped out here on this wick here, right? We went short off this area, we get stopped out. This bar here, what I would look for is I would look for a cross of our bar here to go down. So 5 minute, that's a quick wick. Let's go to a 1, and maybe we can get a little better idea on a more of a precise entry. Bang. We're long again, maybe long again, maybe not. We get out here, right? We're looking to short. We're still good. We're stopped out. Now we go up. We almost have a double top here. We break this line, we're in. We're in for the short. That is 72, 77. You're not taking 10 points of heat there. Now you're riding this short all the way back down. Now whether you want to take it halfway for, close to 50 points, or whether you want the whole 90 plus points, you've got it. Right? And it breaks the line. Now the question is, will it retrace again? Once you hit 2 major moves, so if you hit this move and this move, I would probably call it a fucking day. But if you're too degenerate, you kind of got to look at the time frame. So if your account's large enough where you can trade after hours, maybe you catch that, NVIDIA news or whatever. But I would say for most everyone out there, you're looking to get out around 3:30. You're looking to wrap shit up, and it's just stitching. So if you played this strategy of kind of trying to find the swing, right? I'll go to a bigger picture. I'll go to a 30-minute window, but we're looking at this downtrend. We kind of stop here. Now we're playing this little angle here. We establish a high, what we think's a high, but it's not the 930 open, right? We go all the way down. We start basing. This is a really nice base. Does it hold up? Well, it doesn't, but we don't know that yet. Then we get our open. Bang, bang. So around cha-cha-cha-cha-cha. So around 9, granted these are 30-minute bars. On a smaller bar you could see it, but we get our open. We establish a high. Now we're looking to go down here, and now we're looking to come back or some type of a mid-range. But I mean, it plays out fairly elementary. Now if for some reason you tried trading this in between, in between here, you probably might have got chopped up. So the reason why people say, if you can, try to get, everyone's always saying, hey, buy at the high, sell at the low. Yeah, fuck you. It's not as easy as it looks. But I think over time, if you're patient enough and you kind of establish a range of where the past, this is the data it's given us, down, down, bang, bang. It's just hammering and going up and going up and going up and going up. So I feel comfortable establishing this line here. It could be wrong. It could drop down. It could do tons of things. But looking at how it played out, right? So it's here, it's here, it's here. We just keep following it. Okay, we get an up move. We've established this level. Let's see what happens. Oh man, we go all the way up here. Okay, where do we go now? Immediately back down to here. What a nice move. Look at that. Look at those points. Right? Okay. I'm out, If you caught that, God bless you, playing off here. But if not, you waited. Right? You established that low and you waited, to get back in. Then you caught that. Beautiful. Then you thought, you know what? Maybe I'm going to go short. I get busted up. Let's try it again. Bang. Day over. That would be trading the long game, and that would be trying to find areas at which, if you wanted to, were possible positions to add on, right? So we go up, we go all the way back down to almost this area, so that could be an add-on. And now we're looking to retrace, that general area again, or levels. We have a level here, level here, level here, level here, level, A lot of times your best add-ons, it looks different per time frame, obviously. Depending on the time frames you like to trade, you can kind of see ranges and zones. But it's always better to add on during a pullback. If you establish range like this, sometimes I'll play small ball, where if you see like bang, 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 it's just hitting off this level, right? And then you clean it up a little, and it seems to be playing from here to there, right? So you're catching a 106 to 86. You could play those if you wanted to. You could 2 contract highs, especially if you think you're going up. Like if you wanted to be a little bit more aggressive, Not recommended, but some of us are hyper aggressive. You could start longing off of here and just taking those points. So 86. Excuse me. I'm not feeling too well today. But yeah, so what are you playing there? You're playing 86. Oh, 14 run. 14, 14, 14, 14, 14, 14, it adds up. But that could be kind of stressful, right? Because you're in, out, in, out, in, out. Whereas if you just hit it here and just chilled, you caught it all the way up. And then you did the same thing. Just relaxed. Let it do its thing. I'm in no position. Once I clear this bar here, there's nothing that's going to hurt me. Nothing ever comes back up here again. Everything's a downtrend. And I look to get out here again. I mean, that's smooth and relaxed. Smooth and relaxed. Right? You make one trade or two trades. You make two trades. You're done. Done for the day. 1, 2, 3, 4. 90 plus, you're done. So, a lot of ways to look at the market, but I think the more you look at it, the more things like this become clear. So instead of feeling that you have to get in or that you have to make these moves, you never have to do any of that. Now granted, this is all, it's pretend. It's not, it's a simulated market based on the real market. So in an imaginary world, I guess, what do they say? Not financial advice, but let's look at the facts. And the facts tell us that the way this day played out, we have a base, and we have a range. And it just so happens this range is 90 plus points. And if we just relaxed, right? So let's look at this in a time frame. So we had the 930. And then we had the 945. So within 15 minutes, we establish a high. And then we have another bar, which never makes a new high. And then we establish a low, which we already had back here. We broke it. We go down. We get spanked. We go back up. Now we're in a long. And that is 10:45. So an hour later, we're catching a 90 plus point run, right? And we're out here, say 135. So 10:45 to 135. We wait, pay no hurry. We take a short, we get spanked, right? We come back in here, and we're short again. And we're in no danger. It moves crazy, but guess what? We're out again. We get filled at 255. That's it. That's your day. If you played it, either one of these moves, even one of those moves, that's it. You're done. You've established a move. Now, if we woke up earlier and we were playing this line, right, which is more of a smaller game, but you have a long, you're done for the day. That's it. You're good. Say you established that as your high, right? And then you waited for the 930 open, which was here. And then you hit this area here, and you said, you know what? If it hits this area right here, I'm putting in a fucking short, right? So hits it, goes down, hits it there, right? Goes all the way back up, gets spanked, because that's 63, 74. Ooh, that's so close. And it's wiki. You may want to hold that, let that go longer than 10. But let's say you don't, and you decide to get back in here. right? Based off of that wick high. So now you get back in. You never get that 10-point spank, and now you're down. And you're down quick. I mean, you got to jump on this. This is fast. But you ride that all the way down to here. But a lot of crazy shit can happen in the open, guys, so I don't know if I would have made that play. I probably would have waited for this area to establish itself as a high. Then you could have taken a short based off of not another bar going higher than that bar, really. And then, of course, you had this bar pretty established. And then this was our long area. So bang, get spanked, right? So it hits here, you take profit, crosses it again, you're long, get spanked, long again. I mean, that's bananas. So there is something to be said about patience. And then there also is something to be said about just walking into the market at a certain time. You know, what time do you like? But if you were at 335, you have to take what it gives you. You're taking this. You know, at 650, you're still playing off that line. You're catching that killer long. Holy shit. You know, you're playing that 67 to 146. That's bananas. And then, you know, you're getting wicked, you get out. Next thing you know, you're waiting for that 930 open, let the chaos happen, shoots up, you're like, oh shit, I'm looking to short, goes all the way up, starts getting tired, I'm shorting here based off of that, right? So if you were awake during this area, you're probably prone to short in that area, which I wouldn't blame you, and you would have caught a beautiful short. Had you been patient enough. I guess what I'm trying to say is don't just automatically assume it. Once you hit the New York Open, you can have crazy stuff happen. So you can have mass movements that happen very quickly, 20, 50 massive moves that happen in seconds, and you don't want to get caught up in that. It's a quick way to reduce your capital or limit you. You may what if you took a 30-40 point loss, right? What if you're down close to $2,000 or whatever you're down, because you got in at a time where volatility was so crazy. You took that $1,000 to $2,000, $1,500 hit. Well, now you're thinking to yourself, well, shit, I'm close to busting out, and I've eliminated the ability to take leverage, right? So, for instance, if you're a one contract guy, what is that, 66, so that's 56, that's 10, 46 would be, that's too much heat. But if you wanted to take 15 or 20 points of heat, which I don't know why you would, but some people do, the more capital you have, the more moves you can play that are more realistic. But I would still keep your stop losses manageable and reasonable, because once you establish lines, right, take a 10-point hit. Who cares? You don't have to ride this all the way down. Take a stop loss and then wait for that line and wait for it to really break it. If you're hesitant and you're like, fuck it, it's just going to stitch it, which sometimes it does. You may find an area where it's just stitching this line, right? So then you want to establish a time frame where you're playing a wider spread. Now, what do I mean by that? So you eat this downtrend, you play this here, right? And then right now you're 66, 56, there you get spanked. But now in this area you're good. But if you have a decent stop loss, you're not worried about the small ball, right? But if you're close to busting out, you might, it's really hard to, when you're watching it go against you and $500 you're busted out, you're like, shit, it changes things. So Protect your capital. Don't get in when it's really volatile. Establish your lines, and then make good decisions based off of the data that you've established, and take what it gives you. You know, if it shoots up, get out. Who cares? I mean, look at this. Take a stop loss. But the next time it goes in, oh, look at that. You know. Whoops, I'm moving all my lines around. But you can see, you know, basically how everything plays out. But I think it's important that you have a frame of mind that look at what it's given you, and then look at how it plays these ranges, and look at areas where it ran out of money. So here we had sold, bought, sold, bought, sold, bought, new level, right? Which kind of corrects this area, but that area already corrected itself. New level of buying, so now we're looking to gap that off in some type of a sell, but then we peak up here. So now we close that area with sell. So we had bought, we have sold. Now we go up to a new high. Do we shoot up from there? We could have. You know, there's no guarantees a line like that's going to hold. You know, we very well could have hit a next level up. So put your stop losses in, but that's not what happened. When we established a high there, we played it down to our low, and we played it back up to our high again. Now, some people might think it's taken off to the moon. Well, get out, man. Get out. Look to short it. Let it wick up. Come back in for that short. Bang. You know. But I agree. Sometimes there's only so many times it's going to knock on the door, and then it's just, you know, it's off to the next area. But I would say don't get caught up here, right? Or caught up here. You can play mid ranges, but they're a little bit more tricky, and if you haven't established a pattern, right? It took me 1, 2, 3 touches to draw this line where I felt comfortable that was a solid line. So if I'm watching this as it happens, right, I'm kind of playing this line here, and I may think, well, I should probably just short here and short there, and you know, whatever. But once I see this touch, I'm drawing this line, massive long off this line, up. Next time it hits here, let's go long. All right, that pays off. Kind of get tired out here, massive move up. Let's look to retrace this. Digga, bang. There's the retrace. Breaks it, shatters it. That line gets destroyed, but guess what? It comes back, never breaks back down again. Level, all the way up, I'm out. Now, is it going to continue up? It might. So I'm getting stopped out there. Fuck it, I don't care. But if it breaks back down and doesn't make a new high, I'm taking that short. And then if I'm still in the game, I might play the long again until it gives me a reason not to. I'm going to take what it gives me. I'm going to take this. I'm going to take this. I'm going to take that. I'm going to take that. I'm going to keep on taking what it gives me. And the other caveat to that is you don't need all this, right? You could play 1, maybe 2, close your computer. You're done for the day. There's no reason to trade the whole day unless you're too degenerate. Call it a day, man. Go enjoy yourself. Do something fun. But I think to me there's a lot of ways to day trade, and it's a lot of human nature, and it's a lot of things that you can get caught up in depending on what you're looking for. You know, and it gives you everything you want. It gives you spastic movements. It gives you ranges, decent ranges. It gives you decent longs, decent shorts. It gives you mids, right? It's a whole journey throughout the day. It gives you long ranges. But what makes the most sense to play? You know, do you want to play the chop? You know, like, do you want to play blackjack, ding, 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 you know, or pong? Do you want to play that choppy shit? Or do you want to just sit back, relax, watch the war happen, draw your lines based on how the battle's been happening, and then make your decision based off of your solid lines? And sometimes that's the easiest trade you can make. The problem is, it's patience, man. You know what I mean? And there's no guarantee these hold up. But, you know, given how the day shaped out, hopefully this makes sense to you and it makes you a better trader. But that's all I got for today. Thanks.